value area high on Bitcoin in this range. Nice move up. Uh, Coming from a little bit of Coinbase spot buying, but Ethereum made the move more aggressively than this. Bitcoin is still stuck in the range. Ethereum is trying to reclaim some levels now. So uh, what can I say? If we're looking at weekly open, Monday low, and so on, we already had the Ethereum try here on Wednesday to reclaim Monday's low. So about 3,700. It failed, went down to take out this liquidity in the 3,500, 3,520, and so on. Uh, Unfortunately, I didn't get today another step lower into the 34s, but I will leave this limit. What can I say for Ethereum? It's clear that 3,500 held, let's say, twice. So we might be forming. So there are two variants on this. Overall, the 4-hour trend is still up. The 4-hour green support trend line around 35.7 went deeper, but it got reclaimed. So overall, the 4-hour trend is still up. The daily trend is still up. We haven't lost the 4-hour trend. We lost the 1-hour trend partially, but now it can get reclaimed. So what are let's say future setups for Ethereum based on this? Well, based on the 1 hour, this is the 1 hour demand here. The order block left behind with the imbalance here with the fair value gap. So let's say the earliest, most aggressive setup, we will leave this one, the bigger one at 3,400. Would be anything into 3660 to 3620, basically trying to get at least some kind of scalp. Like the issue with this is that the invalidation is kind of wide, so you need to do it like a tighter stop loss. But this is the first area where you would like to see Ethereum hold. If this is the 1 hour trend reclaim, and basically you have the 1 hour fair value gap, the order block left behind, the retest in the origin of impulse, and then a continuation for Monday high. This would be, I wouldn't say it would be a lower grade setup, but it's clearly that the more obvious part would be, because we already rejected from Monday low currently. It's trying to hold to reclaim, but we rejected previously, sorry, from Monday low. Currently it's trying to reclaim, so we will see if what happens today. This range here, it's clear that the 3,500s are a major point of interest, and it's clear that anywhere closer to the 3,800s is the rejection zone. 1, 2, 3 rejections. The fourth one didn't even go to 3,800, and now you have this type of, on the 1 hour inverted candle, looks like a liquidity grab basically from here. Looks like a buy side liquidity grab of these little equal highs. Sorry, uh, but hello guys. Eggs. Yes, I use Kiyotaka. I can walk through after I finish this Ethereum part. Okay. Because Kiyotaka can be, let's say, customized pretty much based on your specific needs. So the idea is that if this is the range on Ethereum, we have the point of control of the whole range here. We hit value area high. We had value area low at 3,500, 3,520, 3,530, basically around this area. So if this will be the range that Ethereum will be using it as an accumulation range for the leg up into 4K or 4K plus, basically you would like to see anything closer to 3,500, or ideally the external liquidity grab of the range, very similar to how we had this part here. and then a reclaimer value area low, for example, which would fill my order. If it rejects, of course, it maybe it will just continue from here. We don't know. The continuation part would be acceptance above value area high, so above 3770, just that grindy price action which we had here. So let's say one major point of interest value area low or close to it. One, let's say not so high win rate type of setup, but you have the 1 hour demand with the 1 hour trend and with the point of control of the range around 3650, 3640. So that would be maybe a scalpable setup based on reaction. I wouldn't leave limits. Invalidation should be at least under 3600. So basically, you need to look at the last wick that created the impulse move up, and you need to take in account the possibility that one will be also taken out. So something like this. Let's say that's why it would be more like a scalp situation based on reaction. If we have like a wick like this, that's a good reaction. You can scalp this setup. What else? Uh, a lot of coins, and especially the ones that look like Fartcoin now, where you see it's still in like a 5 minute range. It couldn't break out even with ETH going above 3700. Um, in setups like this, you see the range continuing while open interest going up. Open interest going up while price is going down. Not ideal. A lot of shorts piling up here in this kind of setup. So I wouldn't really look to trade this. If you compare Farcoin with, let's compare it with Bonk, for example, 1,000 Bonk. They are like two different charts. Bonk is incredibly strong from today's, let's call it 0.3160.317 low. Went up 16%. As you can see, it broke out of the highs that were pinning it around. If this was a smaller range, you compare this price action with this price action. It's clear from these two, you would like to be more involved in Bonk today than in Fartcoin. And on Fartcoin, you're looking for lower, or basically what Bonk did, this part here. How is this relevant to our ETH discussion? Well, imagine this, but on ETH, where you have this kind of grinding price action. Let's look at it like this. Happening on ETH above value area high. So basically, if you can imagine a continuation like this. Above 3740, 3750. This is where you can get involved with an easier type of invalidation, where let's say if you want to risk it and you believe this kind of grinding price action will lead to expansion, you shouldn't go back down into the range. So it would be a setup something like, let's say like this, with even tighter invalidation, for example, and you would see expansion pretty aggressively if it reclaims something like this, let's say. For a more aggressive continuation type of setup, I don't necessarily like these ones. I like the ones in the pullbacks, as you guys know. But hello, watcher. Hello, living off the grid. Thank you guys for joining. So Bonk on the radar. For Bonk, we have major 1, 2, 3, 4, 5 five times it couldn't break 0315. We talked about this 4 hour demand zone, and you had the liquidity getting built up. And basically, if this is the range, you hit value area high again now, and basically 0316, 0315 is major support. Uh, I would have wanted to see a little bit lower into zero point 0.3, basically take out everything, or 0 to 9. But yeah, that's why I have alerts here, and I'll put some more alerts here on Bonk. So this demand, this 4 hour demand, was tapped 2 times, and there is no more liquidity resting overall. You got everything from grabbing these lows. So of course you're going up into the value area high or close to it. So we'll see. We'll see if there is another continuation on Bonk showing. 4 hour trend has been reclaimed with the POC around 0.34. So we might have the same setup as with ETH, but around 0.34. But again, you're still in a range. A range is a range until proven otherwise. So that's why I'm more hesitant now after what happened in the morning. Hello, Mr. Mystic. Thank you for joining. Balkinator says, you mind doing an analysis on CRV? Yeah, let's look at CRV. How was the reaction today? I haven't charted it today. I was looking at it in with the others in the team stream. I think on Thursday team stream. Let's see, where is CRV? Whoa! Now with CRV, Mr. Balkinator is basically the same thing as with Bonk. Major support. Look at all these lows. These lows got taken out. Basically, it's very similar to what Bonk did. But Bonk had a 4 hour demand here. Now this CRV has a 1 hour fair value gap as an imbalance. But the range low of this all of this move is around 0.9, so 90 cents. Value area low 92. And it's clearly we're getting rejected off of $1.031. So basically anything closer to 90 cents, 89, uh, it has been it has been protected on CRV. So let's put some more alerts here around 91 cents and 90 cents. Um, this is on the 4 hour. How would I treat this? Let's say we're rejecting and we're coming back. Well, the obvious part would be to fill this 1 hour imbalance at least a part, and then to reclaim 92, 93, basically above the value area low. It would be like a 4% stop loss, but then you can play it up into value area high and expansion depending on the situation. But anywhere closer to the 90 cent area, it's clear you have support there. Now, what can happen in these moments where people are more bullish in the last 10 days, let's call it? You do not get that perfect liquidity grabs. You don't get this. You get basically the same people bidding 91 cents over and over again, heavily bidding it or starting a TWAP or doing something like that. So you don't get that sharp, aggressive move like that wick that confirms the liquidity grab and the imbalance feel of all of this area. So if you see something like this, great. That's how you can execute on a market entry based on 15-minute candle closes, 1 hour candle closes, depending on what you want. If not, basically around 90 cents, 91 cents for CRV. I cannot expand on the 1 hour imbalance because basically that's explaining what in the education section you can find under. Let me search for it fast so I can link it to you. Market Structure Masterclass by Pat. I think he covers imbalances somewhere. it's not worth our time to try to explain a concept that you have already explained there, and it takes hours. So basically, if you see anything called imbalance, single print, or fair value gap, also known as FVG, you have an indicator that shows those imbalances. It's a free indicator used by everybody. It's called, how is it called? ANKIS or ANCH. ANCH. ANKI FVG. It's free. It shows you imbalances that are filled or unfilled. And basically, you need to know like what are the general rules in trading imbalances, which imbalance to pick, and so on. So it's something more elaborate. Uh, to give you a grand idea of how you would trade this, uh, so if market is trying to always find balance, as we have seen here, it's trying to create the fair value between 90 cents and $1 in a range. The moment where you have some explosive move up, uh, usually generated by aggressive market buying that leads into a short squeeze. You see this very regularly on altcoins. It leaves behind what is called an imbalance. Basically, if you're looking at a footprint chart or stuff like that, you would see how this aggressive move was strictly made by whatever the reason. It can be an entity like, let's say, Michael Saylor starting to buy a Bitcoin. It can be some news or stuff like that. But basically, it's an aggressive move up that usually tends to get filled because in auction market theory, if you're trying to find equilibrium between the supply and the demand, usually imbalances like this show a lack of equilibrium. That's why it calls an imbalance. And sooner or later they will be tested. Now, of course, not all imbalances will get tested, and it basically depends on what the market is doing at that point. But at least it gives you, let's call it, it gives you a magnet for where price will gravitate to. This can be also inverted, and you can have a bearish imbalance. Now you have a bullish imbalance because it's clearly there is an uptrend here when you're looking at it on the 4 hour. So just imagine it doesn't need to be filled, so it's not mandatory. But if you get the fill, you have more conviction in executing your trade around that area because basically, in an ideal situation, the people that aggressively market bought here that created this imbalance, they will try to protect their position in some shape or form, or they will, let's say, they establish that anywhere closer to 80 cents, 84 cents, 90 cents around here, that price is a price that's convenient for them to get involved in. There is a lot of these are, let's say, concepts that are well known inside any technical analysis, not only in crypto, any trading strategy. So you find a lot of things about this in the education section and online, of course, for free on YouTube and such. Now let's look at actually, where are my? I will put alerts here at 92 cents also on CRV just in case. I might want to get involved into this because it's um, we were expecting for it to break down from this and look at maybe because we have like the daily is actually pretty crazy, and you have also a daily imbalance here down into 77. So, but it's holding for now, at least for an intraday scalp. The 90 cents area is good for CRV scalping. You have a 1 hour 200 EMA also at 92, so even more confidence for the trend traders out there. Yeah, so we will wait for that. Partcoin continuing to be weak. No, I like to trade Fartcoin, but not when it looks like this. Bonk, let's see if it rejects. Now, with Bonk, if it starts getting back under 35,035, it's back into this range. And then we can look at the 03031 area again. Very similar to how CRV, we would look at 91. Let's see on Bitcoin. Look here, 3 million. 3 million long liquidated here in this tiny move here. So Bitcoin went down minus 0.04%. 3 million got liquidated on Bybit. Basically, somebody giga aped on a breakout trade here on Bitcoin. So when I see things like this in like these kind of big liquidations, look at this liquidation spike in a very small move. We're talking under 0.5%. You just kind of see how eager people are to get involved in leverage. Nomad Ninja, I don't know what kernel is. Is it an on-chain coin? Let's see. Do we have a chart? It's on Binance. I don't know what this is. Unfortunately, I haven't traded it. Wow, yeah, it's ripping. No pullbacks. This is the new coin. Well, not necessarily new, 3 months, but this is the 3-day chart. This looks very similar to the new listing dump and then some kind of scam pump up into all-time high, or let's in this situation was the contract opening, the contract day open. What's that here? 50%. Basically what we saw Zora and Newt do. This might do it. I have no setup on it. Look at this 1 hour candle. You have a 30% 1 hour candle. Yeah. But if you're in, good for you. Good for you if you are in. Let's see. Do I have it on Bybit? Yeah. 36 million volume per 24 hours on kernel. On Bybit, that's not a lot, but still something. Almost minus 1% funding. That's good. Good for you if you're in. You will get. Thank you, living off the grid. May you have a good day. Thank you for joining. Now, what other charts? Okay, so Mr. Eggs was asking about Kiyotaka. So, where is here? Here is Kiyotaka. Let me just give you the link. If you guys want to try this, it's still free, it's still beta. You can sign up using that link. It doesn't do anything referral wise, but still, who knows what they will do. They will probably have some kind of payment gate. Ideally, the beta testers will not be paid, but I mean, they will not be transformed. But who knows? Going very, very quickly through this. You have several ways of using Kiyotaka based on your experience and based on whatever things you want to do. Now, you have different heat maps. Now, when you see the word heat map, basically it's like an X-ray. Call it an X-ray. The heat map can be usually it is showing the limit orders that are in an order book on both the bid and the ask side, so both long and short. Now, what's good about Kiyotaka that because, for example, what do we know? We know that centralized exchanges aren't allowed to give data on the client's liquidation. Uh, so whenever you see any kind of liquidation heat map, like the ones we have on CoinGlass, liquidation heat map, and you see model 1, model 3. Why is it saying model 1, model 3? These are calculated metrics, not API based. So they're not this is not real data that's coming out of the exchange's API. Okay, these are just calculated metrics based on their model of calculation. They have three models of calculation. Now, as you can see, of course, they're calculating based on whatever data they can have. They can have open interest, they can have order book data and stuff like that, but they don't have the centralized exchange liquidation data. So here, if you see that there are major liquidations at so 123 million liquidation at a leverage position at let's call it 120k. This is just an let's call it a calculated guess. This doesn't mean that there are actually this much liquidations there or any. Of course, there are some liquidations because we have liquidations everywhere, but I think you understand what I'm trying to say. There is a difference in data where you're looking at real-time data given through an API, or you're looking at the calculated. I can create myself a calculation and show you charts like this. Does it mean they are correct or they're statistically correct? Who knows? Sometimes they are, sometimes they're not. But again, you're talking about calculations based on statistics. What Kiyotaka has, for example, because the centralized exchanges, this is by law, so they cannot give you liquidation data. But Hyperliquid, for example, or perp dexes, which are on chain, they are giving you liquidation data, same as we have seen with James Wynn main character arc when everybody was looking at his liquidation on his stupid trades. Stupid as in, let's call it aggressive. Uh, like high leverage, tight liquidation compared to entry and stuff like that. So here you have the actual liquidation data coming from the Hyperliquid API, and basically Kiyotaka aggregates it, so it puts it in a way where you can see where are the most important. This is on Bitcoin, for example. Where are the most important areas where long liquidations are on Bitcoin? Around 2,000 Bitcoin at 116 currently. There are long liquidations around there and short liquidations, big ones. And here you have like a filter to show you have some smaller ones also. But I'm looking at the big ones. We're talking about the 500 plus, 600 plus Bitcoin. Let's leave it at 600 plus. And then on the short side, pretty interesting to see 126 k, 1.3k Bitcoin there. How does this help? Well, if I know that these are actual this actual data and there are liquidations there, and we know that Hyperliquid is an exchange that now has pretty much a lot of whales. Their trading size is generating volume. It's the biggest perp dex out there, and so on. Number one as in with products and everything compared to the other ones, DYDX and whatever else are people using. Then if this lines up, this liquidation lines up with, let's say, the idea presented where I would look for basic range technical analysis under value area low as, let's call it as close as possible to the external range liquidity grab, this time on the sell side liquidity. So anyway, closer to the 115, 115.7, anyways under 116. And I have, so this would be a standard setup. And then I have also major liquidation areas from hyper liquid under 116. So we have a lot of orders there. As you can see, 2k Bitcoin liquidated under 116. Of course, these can be moved. They add leverage. They add the margin, they close the positions, and so on. But I have now 2 points of confluence in my, let's call it, in my analysis that can better my execution. First of all, the standard range trading technical analysis setup, which you can take blindly. Or you have extra confidence that if that thing happens, so if we go there under value area low, you can actually see these people get long liquidated in real time, which actually can provide basically what is known as that liquidity grab. Basically, people are using long liquidations, of course, to fill their orders easier and basically create those spikes, those wicks that you see. Why are liquidations important? As we all know, trading, as other things like poker, this is a zero sum game. For you to win, somebody has to lose. This is basically because it's basically the difference between supply and demand. So with this in mind, for you to win, somebody has to lose. Uh, for you to sell, somebody has to buy. Okay. The best reactions are where at range extremes and when the most amount of people get caught off guard, because liquidations are a forced sell event. That means that the exchange creates a market sell order that's automatic. So those people don't want to sell, they are forced to sell because it hit their liquidation price. These usually give the best entries and give the fastest bounces, uh, which you can call mean reversion type of bounces. Basically, these are the moments where you want to get involved in. So if, for example, you wanted to get uh, a leverage exposure on Bitcoin. And of course, you don't want to buy here right in the middle of the range at 118.5 because you don't know. It can break up, it can break down. So you're looking at somewhere where you can get a discounted price, basically. So at the extremes of the range, as low as we go under value area low, it's a discount. As high as we go above value area high, it's a premium. So you want to get involved somewhere with a discounted price because you want to have a good risk or reward, or you want to have good profit margins in case it breaks out. So how do you get there? Well, the easiest way to get filled there are for people to get long liquidated. Basically, they're getting caught off guard. They are forced to close their positions. This creates a liquidity cascade, and you get that discounted price. The discount might probably not happen if those people weren't forced to close. So this is how you can use Kiyotaka with actual API. It's called Hyperliquid Liquidation Heatmap, and you can put it here in from the indicator section. I don't know exactly where it is now, but trade and liquidations. Here you can have uh, see here you can see on trade and liquidations similar to AGGR. Here you can see liquidations. Wow, man, it's like a lot of people are getting liquidated right now. Bitcoin going down. This is why I didn't chase the move today. It already hit value area high. It's not. It was in the premium area, not in a discounted area. So you have also these liquidations. See with like a bull, and then of course you have the order book, which let's see if it loads. This is a Binance futures order book. Basically shows you the bid and ask. This is another discussion how to trade using order books. There is data there is like education section and data on this. It's a total different ball game, but at least you can see like, okay, where are the like biggest buyers or people that show the intent to buy with limits. Now, how else you can use this? So we are not using the liquidation heat map. We will be using the order book heat map. Let's see. Order book heat map. Now, this order book heat map, basically, let's put it at for above 400 Bitcoin order. So basically, this shows you because we were looking at the order book on Binance Futures. It shows you the same as the liquidation part from Hyperliquid, but here it just shows you where are the most longs and shorts from Binance Futures as resting limit orders. So for longs, we have 1.6k around 115k, 1.6k Bitcoin total orders around, see, 115k. That's good. What do we have? We have around 117.2, also like 400 Bitcoin orders and so on. And on the order book on the sell side, sorry, on the short side, I wanted to say around 120k and some here, but nothing major compared to this 1.6k Bitcoin around 115. Now, how can you execute with this? Yes, eggs. So how you can execute with this? So it's the same thing. This actually shows you liquidity as it shows you resting limit orders both sides. Different than the API, which just shows where people can get liquidated. Doesn't mean they will get liquidated. Same as it doesn't mean that these orders will still be there when price reaches. Maybe they pull out the orders. We have seen this in the past. This is known as order book spoofing. So how can this help me? How can this help me execute? Well, if I know that I want to bid anywhere close to 115 point something k Bitcoin, because those are where people will get um, aggressively taken out through through long liquidations. Now, if I see a big centralized exchange like Binance also um, having here, having also big big long orders, big long orders around 115, this gives me even more confidence to execute that. If, if these long orders will still remain there, so let's say we are reaching this price, and then on the 5 minute, because we are here on the 5 minute, oops, on the 5 minute, you can see a wick candle into this yellow heat map line. If the wick went through, Kiyotaka shows you, I don't know how many candles behind. It shows you that basically those orders were filled. Now, if, for example, I know that the Binance whales have orders there, the hyperliquid whales got liquidated, long liquidated, and filled the orders from the Binance part, it gives me even more confidence entering my technical analysis setup here, because I know that there is absorption at least coming from the Binance Perps order book. Now you can do this with Binance Spot, you can do this with Coinbase Spot, whatever. But at least you see that there is absorption there. So these are like three different statistics or three different methodologies of executing the same idea of 115k or close to it, but put together, it gives you more confidence. Now, in the beginning, I don't want to say that is this mandatory, because it's not, and you don't want to get involved with a lot of information and to have what is known as analysis paralysis, because you're getting too much data and you don't know what to focus on, and basically you're not executing. But this is basically how TA can go into layers You have the standard TA where you do not see what is happening actually in the order books. You do not see what is happening inside the candles, like in a footprint chart. You just execute because you know that statistically the range lows and range highs are extremes that provide good, at least intraday movements. But let's say you get a little bit more experience, and a lot of times this setup fail. And you see me, like for example, yesterday I was in the Ondo trade, then I was in the East trade. There were limit trades. I got filled, but if the reaction isn't what statistically I'm more inclined to want to see, as in getting that absorption, then I'm going to cut my trade because it means that something is happening in the market, or the market is in such a risk-off environment that the people aren't bidding anymore. There is no absorption. Um, how can you see this, for example, in our order book? Let's say price comes here, there is a lot of spot selling or there is some news, and you just see these 115K orders disappear. How do you see disappear? Well, very similar to what happened here. There is a gap. There is a gap. Basically, you see there were orders up until this time, which was for us 3 p.m. Now it's 7 p.m. And basically from 3 p.m. people pulled out these orders, these big orders. Now maybe they moved it, maybe I don't know, they canceled it. But from 3 p.m. onward, now it's 7 p.m. in this 4 hour gap here. You see, it's nothing. It's just a gap. These orders aren't there anymore. Now, if you see that happening here on the 115K absorption level, then you might say, okay, let me just wait a bit, see what's happening, because maybe there's something wrong, or maybe these people, the whales don't want to get involved yet, and so on. So I hope this helps. So this is using the order book heat map. The order book heat map can be used the same thing, uh, to give you more confidence in execution. And in a lot of times it can help you front run them, because let's say, for example, you want to bid 115K, and then suddenly there is a big bid appearing at 115.2. Maybe it's not a good idea to just wait with your 115 bid where everybody is bidding. Maybe you want to front run the new bid, the new big bid, and maybe you want to bid 115.28. So at least you know your limits will get filled. Um, this is shown pretty much in a very liquid asset like Bitcoin, but you can use this on any Binance and Bybit altcoin. And what we were doing uh, in the past, meaning in 2021, where spot trading was extremely aggressive in this I'm not saying lower tier exchange, because back then KuCoin made a lot of volume, but they were it was like the equivalent of MaxC, for example, or like these exchanges that quickly list any new coins. So basically, if you wanted to get involved in some new coins before they got the Binance or FTX listing or so on, we were looking at KuCoin, and basically we were looking at the order book and see where on the daily and on the 4 hour chart, and see where there are major limit orders, and we were just front running them. With wider stop loss, we were playing spot, like on coins that we wanted to get involved, because more often than not, because there was volume there, but there wasn't like crazy amounts of volume. Those big limit orders were the ones that were creating support. So those people, whoever they were, be it being a part of the team or being investors that wanted to protect their average price or being whatever, they were the ones forming the bottom. And we were basically looking at order book, and now we have heat maps to do that for free. and back then it wasn't for free, and we were just front running levels. It's like if I know 115 is an aggressive limit bid for people on Bitcoin, I'm going to start DCing from 115.5 down to 115 and lower my position size, and at least I know I get filled. So this is with using any kind of heat map, order book heat map. It doesn't matter. Again, the good thing is that this platform is still free. In the past, you have seen me use Trading Light. That's a very good platform. They had some issues with their servers, and I didn't like how they treated the whole thing because I was a paying, and we were all paying subscription members, and basically we missed 3 months, not 3 months, sorry, 3 weeks, almost 1 month of them not solving the server issues and all kinds of bugs and stuff like that. So the same thing on Trading Light. And of course, you can put more indicators. You have derivatives of the activity like open interest, funding rate, open interest, uh, implied volatility, all kinds of metrics, all kinds of stuff here. Like we have on Coinalyze, this is the funding rate on Bitcoin, this is the open interest on Bitcoin, Binance futures, and so on. They do a lot of things. You need to try and check it out. Uh, Trading Light also is very good. CoinGlass has one. What's the name? You guys told me about it. Somebody from the server. Legend. This is their basically the same thing. I think it's still they have like the liquidity heat map for the order books. They have a little bit of a footprint chart. I think Kiyotaka has also basic footprint charts. The large trades being executing, those bubbles, like basically where large buys and sells were getting executed and stuff like that. Bonk needs to hold 34, but I'm not going to trade here. I think Watcher, you asked me. Hello, Mr. Bobbers. Thank you for joining, Mr. Capybara. So if it starts closing under here, we might just go fully down. Of course, depending on what Bitcoin is doing. For now, it's holding, but see the difference between what we had here. CVD spot was on top and now it's going down. So there is some spot selling coming in. We see this from Coinbase, from Binance, from OKX. But it's still up. It's still up. What was today's low? 117.2. Yeah, basically we're see how there are still these limits here. What's the difference here? 1%. 3% into the big ones. Okay. Any questions or chart requests? We are approaching the 1 hour mark and don't know if I think Mazza will stream or Pat and Ventura have one order flow session in 35 minutes. So LTC. Let's see. Did it lose 110? I haven't checked. Not this one. This is I need the USDT perp. It hasn't lost 106. This is the major area. Let's see on the 4 hour. Did it? Yeah. Major area on LTC. It held so 108, 107. It held the 4 hour grid support trend line. If this will fall, the origin of impulse move up and also this 4 hour demand here. that lines up with the yearly open, so 103. A yearly open retest on something like a major like LTC is very important. And you have 1 week, 5 day, and 1 day naked points of control, so these are untapped. And the 4 hour order block here. And also, this is the origin of the last impulse move up. If you remember the news, this candle, where they had the news that some company, I forgot the name, wanted to do a $100 million LTC treasury fund. This was the news candle from there. So basically, you would test this anywhere around here. The conviction of those people that bought LTC inside this demand zone here. So from 103 yearly open 103.6 down into 99.6. That means you have like a 3-4% area where you can get involved in spot, or you would like to see it hold, or you would like to see at least some kind of grinding movement and then a break of structure and get involved in here, for example, on lower time frames, on like 15 minutes, let's say. If you want even more confirmation with a break of structure after hitting that area. So yeah, this is on LTC. For now, it should hold 108, but if not, this is the major area here. This is where the news came in. Okay, guys. Thank you very much for joining. We are approaching our hour. So I hope it was informative. Thank you for participating. And we have tomorrow with Tariq and Mouse the afternoon stream or morning stream for the UK. And then see you in chart ideas, see you in recovery if you need it. You know the drill. Just tag us with questions and we will reply as soon as possible. Thank you very much for joining. I hope it was informative and see you tomorrow and then next week.